Schwab is eliminating U.S. stock, ETF, and options commissions. All the online broker stocks are getting hit on this news. It actually follows last week. Interactive Brokers went to a similar structure, zero commissions on those ETF and stock trades. So the race to zero in commissions is well on now.
The race to zero is well on.
Well on. There are a couple people already there.
They're already there, exactly. And everyone's going to have to get there, yeah.
There'll be, of course, some ways that they'll eventually still charge, whether it's an annual fee for the account or perhaps even a monthly.
They make money
we're very
on the
close.
back end. Obviously, a lot of these firms are gathering assets. They're charging a fee on the account, or they're just making it on the trading side as they make markets of different stocks. But it's very interesting because for many years, the traditional online brokers, the retail brokers said, look, we charge $6, $7 a trade. The average trade size is $10,000. It's really not that big a hit, but obviously the pressure of a lot of the startups has been felt.
I mean, those are some significant moves.
Exactly.
TD Ameritrade down 14%, E-Trade down 13%. Does it really drastically change the business model?
Different degrees for different companies, and that's exactly showing you that right there. The Ameritrades and the E-Trades are more geared toward that per trade commission. Schwab is a little more of an asset manager, a custodian of assets, and Interactive already got there.
Yeah. The question, Mike, as you correctly pointed, is whether in 6 to 12 months there's a bit more rationalization between all of them and they make their margin almost as big as before, but through a bid-ask spread that's a bit wider.
I would say almost not almost as big as before. I think that's all automated up there. I mean, yes, you can make it up, but it shows you here, I think, the fact that the stocks are getting hit, that there was a relatively cozy setup for a long time. It's
hard to imagine that it was a cozy setup when you think of where we were 10, 15, 20 years ago and what those numbers were and how
Schwab used to be the cheapest at like $30 a trade, 25 years ago.
I mean, the other point there, of course, like if you look at a Schwab, it's had a bad 18 months share price performance, but it had a fantastic 16, 17.
Getting hit also by the Fed cutting rates. And
right.
They're not earning as much on their balance.
Yeah. But it had a good run in terms of the market share and the way their market cap caught up with the falling market share of a Goldman Sachs, for example. Like those guys were in actually quite a good space. As you got more automation of trading, that was a structural thing that supported them, even if the fees on it came down.
Schwab, as an asset gathering platform, has done really well.